Hi everyone, I hope you're all doing well, and today I'm going to talk about the three stocks that I bought this week. And yeah, I bought into these three companies at some point this week. I think most of them was quite early on in the week. So yeah, that's when I bought most of them. So if you could smash the like button, that'd be absolutely amazing. If you are new, make sure you subscribe and I'll reveal the three companies that I bought. So if you do want to keep up to date with what I'm buying and what I'm selling, make sure you join the Patrons group. Link is in the description. I always post there when I'm buying and when I'm selling, as well as some exclusive content on Patreon. But we'll get started with number one. So I'll try to spend about 3 minutes on each company, just talking about a little bit of information on it, but I've got most on the channel. I've got probably full videos on a lot of these companies, especially this one because I did one about 2 weeks ago, which number one was Beyond Meats. Now I said on three stocks to buy that I probably won't be buying any more of this because the share price has gone up a little bit too much, but we did have one day this week earlier on where Beyond Meats did dip down to about the $136, I think it was. And I was like, this is actually like near my entry price here. Maybe I should just increase that position in case I don't get another chance. So what I did is with my Beyond Meats position, I increased my position by 10%. And I thought, well, this could be maybe the last opportunity I get to buy a little bit more of. So I did increase the position by 10%, and I'm quite happy with that. My Beyond Meats position is kind of nearly where I wanted it to be now. I would like a little bit more of one more dip would be really good. So I could increase it by about another 20% and I'd be about where I want to be with Beyond Meats. But yeah, I thought I'd take this opportunity to buy a little bit more into Beyond Meats company. Just a little bit of interesting information about the company and why I am so bullish on it. But like I say, I've got the full video on it. So first of all, industry it's in, growing industry, plant-based, healthy eating, everything like that. So I think it'll be a growing industry. And the great thing about Beyond Meats is that it's developing a lot of partnerships. So as well as having a lot of these products in, say, supermarkets, it's have a lot of big deals with like Starbucks, Pizza Hut, maybe McDonald's, Dunkin' Donuts, and everyone like that. There's a lot more out there. But it's got these great partnerships. Now, first of all, before we get onto the sales point of view, marketing. Having your product advertised in these major stores is pretty much free marketing, which is amazing. But the other great thing as well is the revenue. You know, having your products in these sort of restaurants will bring more and more revenue into the company. It kind of has the side thing of having, you know, supermarket income, but as well as that, having the actual food outlets, having their revenue coming into you as well as the marketing. Big, great combination it has there. So you've got massive revenue growth, which will probably lead the company to be doing massive amounts of like 50% revenue growth year over year. This company will become, in my opinion, a company that will be putting in billions of revenue in the next coming few years. So that's going to be huge. I think at the moment the company's around about 8 billion, but when you get all this factored in and then more and more factories set up, especially China's growth, you know, this is a company that's only just starting in the US. Never mind, you know, EU, think about if it starts building factories in China and dominates China. You know, this company's going to be putting in billions of revenue in the next few years. And with that will come a good valuation. Probably see this company being valued towards, in the next 5 years, a 30 billion company, which then implies this company could probably go up about 200% in the next 5 years. So yeah, I think this is going to be a massive company in the next few years. And that's why I bought into this company. And number two was probably Beyond Meat's little brother, which is Tattoo Chef. So I bought some more shares in Tattoo Chef. I increased my position by about 20% and I bought a lot of this in the $14 range. So yeah, I increased my Tattoo Chef position by 20%. Now, this company for me is very cheap on the stock market, trading at about 1 billion for a company that's putting in 65% revenue growth, is profitable, has an amazing balance sheet, and it's only just starting to ramp up. A bit like Beyond Meat, some of its partnerships and deals it has. So Walmart was a big deal for Tattoo Chef, which led it to have massive revenue growth. Started off 2020 in about 7% of Walmart's, now in about 50% of Walmart's, and I think through 2021 we'll see that 50% go up once again, will lead to more revenue growth just like this year. Combined with Target, so it's just got a deal with Target now, which it's in only like 300 or 400 Target stores, so that means it's got, you know, 5x potential stores to go in from here. So you think about, you know, Walmart ramping up and now a Target deal ramping up. Now in Target, there's only 2 products in Target. So if you think Target then go and put, you know, a lot more of Tattoo Chef's range in there, more and more sales will come in from that point of view. So you've got the ramping up of Walmart, ramping up of Target, more products going in there. And what I've heard is the Target deal is going well at the moment. You've got potential for new customers to come in as well, which sounds like there's a few on the cards. As well as that, you've got the e-commerce launch going in. And I think this company is just kind of chilling at the moment, and it's waiting for some big earnings, which I think will knock it up in the next few quarters. You've got Analyst Day coming in as well. So I think when analysts come in with price targets of $25, $30, this will help the stock go up. Let's not forget, Tattooed Chef, when it came onto the stock market as a SPAC stock, went all the way up to $28. It's now down at 15. For me, this is, like I said, the shortest ever term prediction I've made, but I guess maybe boohoo, but this one as well is like, this company, in my opinion, has 2x in a year, and that's crazy. I think in the long term, this could be a $60 stock, but I think this is massively undervalued for a growth company, one of the cheapest growth companies out there in the stock market right now. So I think, Tattoo Chef is an absolute bargain, and I don't know how long it'll be down here, but I don't think it'll be for long. And number 3 is the company that I talked about yesterday. I made a full video on, which is the Flying Eagle Corp. And these guys are a SPAC stock, which are going to be merging with the company that is called Skills. So I'm going to try to sum this one up in 3 minutes, but I'd say, go check my video out yesterday if you want more information on it. But basically, Flying Eagle, last time they had a SPAC stock was DraftKings, and look how well that company's done since then. Now, I think Skills has the potential to be a DraftKings sort of standard company with, the share price growth and revenue growth and everything like that. Basically, what it does is it allows, it's mobile gaming, but you're allowed to wager on it. So you play, for money. The winner that wins the gaming match gets the money, and they've got plenty of games out there. As well as that, it's going to allow them to go into tournaments, and also there's a potential from there to be a bit more of a streaming platform where you can watch these tournaments and watch these wager matches. I think that's somewhere down the line for this company, which could be huge. It's also bringing in people to endorse the company. So it brought in Floyd Mayweather last time. It's also got connections with the NFL, and it's getting them to bring customers in and to have gaming matches and tournaments and everything like that. So I think it has a lot of potential from that side of it. The company's growing huge revenue growth, not too far off profit as well, will have a decent balance sheet, and it's pretty cheaply valued at the moment compared to something like a DraftKings. It's hard to compare it to anyone else because there's not really an esports mobile gaming company on the stock market. This is the first one. It's not actually like a betting company. So that means it's allowed in a lot more states. I think it's allowed in about 40 states right now. So it's kind of a brand new kind of industry, this, on the stock market for us. It's kind of a mix between a gaming company and a betting company all in one, but it's still classed as a gaming company. So very, very interesting play, I think, and will do very well. And like I say, I think this, once the actual merger is confirmed and voted on, which is the 16th of December, I believe. So hopefully we see the ticker name and symbol change on around about the 17th. It could be absolutely amazing for this company. So I did buy some shares in this one, and it's a bit more of my high risk play, on my highest spec play in my portfolio right now, but I definitely think it's quite interesting. So those are the 3 companies I did buy this week. So I hope you enjoyed it. Let me know what companies you've been buying. As always, smash the like button. If you are new around here, make sure you subscribe, and I'll see you in the next video.